Tuesday, September 19th. Market analysis, Stan Ehrlich. Good morning, 9:51 California time. So I've been talking about the head and shoulder top formation in the stock market indexes for a few weeks now, probably over a month, but in that ballpark. Today's new lows for significant periods of time in the indexes. And I always start out with the S&P 500 and typically go to the DIAQs and maybe the Russell and a couple others now, because this formation is extremely important. It looks like it's going to produce a bear move down into October like last year. Now, last year's October lows, and there's an extremely strong historic past 30 years plus precedence of making a low or a buying opportunity of some significance in October. It is in the ballpark of probably 85% of the time. I forgot the exact number, but I'll show you a little while later. Now, the last shoulder has been made on September 1st. The head of the formation in many cases is a bearish ER sell signal, the exact opposite of what we got on October 13th, the bottom of the bear market. Yeah, we got one at the bottom on the low day. And we have a recent July 27th sell signal on the high day so far. This is looking unbelievably perfect so far. Don't expect it to continue that way. When it's too good, it's probably too good. So far, so good. We are now down about 3 1/3 points on the S&P, about 3 points lower in the DIA, about 3 lower also in the QQQ. And that is making new lows for about 3 weeks. And a highly likely new low close for 3 weeks as well. And I'll start zooming in to the formation that is really the most important one. Remember that the highs in June, middle of June, 15, 16, are the first shoulder high. Made the low, that's your pivot point, but you don't know it at the time for the neckline start. There's a nice big rally up to the top, into overbought conditions, into a major resistance area. At the time, I screamed bloody murder when we got the bearish signal at the top. Now we went down very nicely and significantly to approximately the same price levels that we did back on the low for the pivot point on June 26, and we bottomed out an oversold situation on August 18th. Okay, now the rally out of the oversold condition at support produced a high on September 1st. Now that's this month. This is recent stuff now. Plus, there was a little bit of a bearish signal on August 24th, only a couple of weeks, a week and a half earlier, that I talk about in terms of a complementary shoulder or a secondary shoulder or an inside shoulder. You don't see that many head and shoulder bottoms or tops, and this, of course, is a top. So far, so good, that have double shoulders. And this one certainly looks like it does. So on the little bounce up July 3rd on the way to the top is your secondary shoulder. And at almost the exact same price as the first one a couple of weeks earlier. Perfect, right out of a textbook. Now we have a sell signal just before the last shoulder high, again, September 1st. But this little bump right here looks like a small shoulder on only a 3-week head and shoulder top. That is all by itself in the last 3 weeks, the last shoulder of the bigger 3-month formation. Had patterns inside of patterns are not that rare, but they are fairly rare. And now we have one. You may not see one of these again for a year or two. So the small 3-week formation has to work in order for the big one to work. And the small one is often running already last week on Friday. It broke out with a very small downside gap, which is absolutely classic, down below the neckline that I've in blue. Now, it's a fairly steep neckline, but it's still legitimate. And gapped away from the pattern. The minimum downside objective on the 3-week small one is almost exactly the neckline, which for the big one. So this is just a great combination. We're already more than halfway down on the small bearish head and shoulder top. Today's low, we're down 3 points and a few ticks. And our low is fairly close, 30, 40 cents, something like that lower. It would be easy to make new lows before the end of the day without a problem. Let's see real quick. Well, here's the 1-minute chart, excuse me, in the SPY, and you can see we're relatively close to the low of the day. We've only bounced a little bit here in the last few minutes. So the trend hasn't apparently changed at all. It might if we get over 441, but that has to happen first. And of course, it's not that far away. We're talking super detailed here. So I'm very confident and expectant of new lows, again, maybe yet today, and certainly between now and the close Friday. And it could be a sharp, fairly big break going back to the daily SPY now, because we're approaching the neckline on the big 3-month pattern, which says we should go down to 407. That's the important number. We're currently at 440, so we're looking at 33 points lower from where we are at the moment. Now, 33 lower seems like a lot, but if you look at last year's bear market, and I'm not saying we're in a bear market, we are not, in my opinion, and this is a 50% correction around 407 of the long-term bull market, which I think is still very much intact, but it's the biggest correction, if I'm right, that we will have seen since October 13th. And it goes for every index. I can't believe it's all working out so far pretty good. Watch the Russell here. It's already broken out. So anyway, I would not be surprised to test the neckline and get oversold, bounce off the neckline for a day or 2 or 3, and then next week and maybe this week, close below the neckline. When that happens, we may do exactly what we just did on Friday, gap below the neckline of the small 3-week pattern. We may close just a little bit above the neckline of the big 3-month pattern and gap below at the next opening. Bear markets fall faster than bull markets go up, but I'm not saying this is a bear market. Again, it's just a big bear move, big correction. Okay, enough of that. Let's look at the others real quick. This is the DIA. Here is the 3-month bear pattern. The neckline has a fat red dashed line. We are already coming fairly close to the neckline on the DIA. It is new lows for over 3 weeks. Maybe a new low close or a second lowest close, something along those lines, for approximately 3 weeks. Since about the 25th of August. And this is the 21st of September. I'm sorry, no, it isn't. 19th, sorry. So 3 weeks. The pattern's there. I outlined it. The neckline was broken on Friday. We rallied up to the neckline yesterday morning. It came down and closed around unchanged and right down the tubes today so far this morning. Next chart. DIA, 1 minute, heading south. Okay. Then the Qs. There's your pattern. Okay. 3 months worth. Oh, I'm sorry. Did I zoom it? Yeah, that's good. And I did not outline the little shoulders on the smaller one, which is really the shoulder on the big one. That's all right. I drew the neckline in. We crossed it on Friday, closed very weak, new low close for almost 3 weeks. Nothing at all yesterday on Monday. And today we're dropping again into new lows. So it's highly likely that we're building more downside momentum. Now, there are various support levels on the way down, obviously, and we're going to have to deal with those as you get down to the minimum downside objectives. And the minimum objective down for the QQQ is 321, let's say, which happens to be a support area. and about a 50% retracement. So I'm very much on track here so far. And once things start to go sour, I'll scream bloody murder, something is changing. So far, nope. Next chart is just a 1 minute on the Qs. And then I'm looking at the December futures contract for the EMini, ESZ23 or ES space 12-23 for Ninja. So new low close, highly likely today, again in the futures contract, as you would expect. And we're heading right toward that neckline, which is downward slanted slightly. The downside objective is 4,115 for the December spider. Next chart. Down we go on the 1 minute chart on the December futures for the EMini. Now, ladies and gentlemen, we have already broken out. This morning, for the first time in the Russell 2000 of the 3-month bearish head and shoulder top formation. And of course, that means you've also broken out of the smaller, relatively flat. The necklines are almost the same in both cases, which is very unusual, but that's what we got. So the minimum downside objective on the Russell is down to 165, which happens to be a test of the all-time lows for the last couple of years plus. So I'm looking for it to come all the way down to here, and it could drop more. That's, I said, minimum expected downside objective. And there's the Russell 1 minute. Looks like the rest of them, of course. Lastly, we got the NASDAQ December futures. It's got a ways to go to the neckline. And the small bit of the big 3-month pattern, the whole thing's a little bit downward slanted. In the case of the 3-week pattern, we busted the neckline on Friday, tried to come back up for a test of it on Monday, yesterday, and today just, again, new lows, 3 weeks, looks like new low closes are highly likely, et cetera, et cetera. Tierra del Fuego here, heading south. And the last chart for the index is NASDAQ 1 minute. We're rallying a little at the moment. Now, let's go look at futures. Remember the December interest rate futures I'll talk about in a second. The EMini with a much simpler view, dropping off, last double shoulder, early, the beginning, first double shoulder. The head is almost, you could say, a double head also, but we got 3 sell signals on top of the market for the EMini. The first one was on July 26th and 27th, the high day. And then we had a sell signal on August 1st as well, and down we went. All right. So far, so good. By the way, I have to point out that we're not oversold on any of these indexes yet. There's still elbow room for more downside move before I get antsy about a rally. So I could be down every day for the end of until the end of the week, maybe. Okay, NASDAQ. Didn't draw on the arches for the shoulders or any of the other lines, et cetera here. Trying to get you to see it in your own minds. There's your last shoulder, which is a small head and shoulder right there. This is the little double top, if you want to call it that, or the high for the head of the formation. And your little double shoulders over here. Same dates, prices are different. And rally highs and percentages might be off a little bit. They're not exactly the same, but certainly all the body parts are there. It is a head and shoulder. Now, interest rate futures. I had been talking about a possible bottom formation a couple of weeks ago, which I definitely abandoned because it didn't work. We started to make new lows several days ago. I think that the bond market is going to start to make new lows for the whole trend very soon. I'm not expecting any collapsing bear move. I'm looking for a relatively slow chewing away at new low ground type of a decline for a while, maybe a few weeks, maybe a couple of months. Wouldn't be surprised if it turned around in October, to be honest with you, because when this chart goes up, usually the market goes up as well, lower rates. So waiting for a buy signal, waiting for some evidence that it's going to turn up, and I don't think so at the moment. Not oversold, fairly close, but not yet. Next chart is the 10-year notes. They have already made new lows for the last month or so, and that's for many months prior to that. And no sign of a turn as yet. Next chart, crude oil just won't quit here. Very, very, very overbought. I expect it to turn down any day now. I don't have a great, well, this is actually not bad at all. Today's rally high is at a little resistance area. I didn't draw in a horizontal plane here, but that's where my cursor is. So previous highs back in November of last year, and it's more than one. So this could be a pretty good spot for it to stop rallying. It's been overbought for like 2 to 3 weeks. It's overdue, and it's very high on the RSI, got up to about 90. Next chart. Heating oil, same thing, but it may have started to turn down already 3 days ago, 3 or 4 days ago. So today's the first day up. Nice day, pretty strong, not changing my mind. I think heating oil has topped out. Next, we're looking at new highs, maybe by only a few ticks or not, but it's right up against that rally high. I talked about the market reaching in natural gas for the last week and a half or something like that. It came down extremely close to oversold and in a support area, turned around. I didn't get any signals or anything like that. But now we're getting close to another possible or probable rally high again, getting close to overbought. It might get up to my little blue resistance line right here at 3.032. Probably close, and then turn down. Next, gold. We have had some unbelievably great signals in precious metals this year. And the last buy signal was on August 21st, and so far that has been the lowest low in gold. We are breaking a significant bear trend line, albeit the second time. This time we're staying above the line, though, yesterday on a closing basis. Now, that's the last time we did it. It only punched through it and came back down to it or below it for a couple, 4 days, and then dropped down. So we could rally, I think, up to 1981, and I simply cannot rule out another test of my little blue zone up here, resistance again like we did once before, and got a great sell signal on the high of the rally. And, of course, a buy signal on the low of the break on August 21. Now look at silver. Let's go back to March 10th, bottom, buy signal, double top. April 14 and May 5th, both bearish engulfing ER sell signals. Fantastic. Bottom of the break, buy signal on May 26th, green. Sell signal on the top of the rally on July 20th. Buy signal on the bottom of a break on August 17th, not quite the exact lowest low, but in support. And oversold conditions, and ER buy signal. And lastly, we had a recent sell signal almost at the rally high. So what's happened? We've come back down to oversold again in support. That was Thursday of last week, bounced out of it Friday and Monday. So today, Tuesday, we're dipping down just slightly lower on the day at the moment. I still think silver's going to come back all the way again to 25. Now, I realize there's a pattern in front of my face here that I should be paying attention to. I'm not going to mention at the moment. Only if this market starts to fail and break down to the red zone again, I think it's relevant to talk about. Next, platinum. We got the bottom of the break. We got the top of the rally. We got the bottom of the break. And we got some other fantastic signals February 27th as well. So the last one was a buy signal. ER3 caught the trade when it's on a retracement within a few days after the actual signal. ER1 is always long or short. When it's red, we're short. When it's green, we're long. So I'm looking for the gap to be closed. I talked about that the last several days, and we have a new high that's coming very close to starting to close that gap. The gap closure will occur at about 968.50, let's call it. And it could go up even further than that, but that's my next objective, because we're getting close, but skip it. It's not that close to overbought. I think it probably will do it in the next couple of days. Next, high-grade copper. Bit of a dip. Not quite sure here. I'm gonna keep my trap shut if I don't have something important to say. Next chart. Soybeans are testing the support area that I've been talking about for months and months and months for the second time. And it is extremely close to oversold, but just didn't quite hit the number. So we're very close, I think, to turning back up again and back and forth as a ping pong ball until we get a major breakout. But the longer term picture could very well be super bullish. I don't know, climate change maybe? That's what comes to mind at first. So major support is holding it now for the second time. I'd be looking for buy signals. Next chart is bean oil. I got a bad buy signal last Friday. We had a day trade loss, not bad, on yesterday's market. And we have another new low today. Glad I'm not long now. And I think it's going to test support again, the red zone here, just around 58.75, a little higher, a little lower. And we'll see what happens next. This could be a double top. The second high, we got a great sell signal. So I'm keeping that in mind, but I'm waiting for some sort of evidence that it's going to be likely a downside breakout. I'm not quite sure yet. Next chart is soybean meal. Same kind of story. Major resistance stopped the rally. This trend is much more obviously down, and I expect to see the first red line at 378 being tested, 379, 378 area, and then 364 next. Next is corn. Yep, another new low for the trend down. And the second day that it's been able to break below a low made way back last summer of 22. So the long-term bear trend, I'm long-term bearish on corn. I think the market has lower to go, maybe quite a bit. Next, wheat. Same story, but a little different because the war caused a blow off top. Classic. We got a sell signal after several days, limit up bid, right smack on the top of the market back on March 8th of 22. So we have new lows for the whole trend since then, just recently, last week or two. And I think it's going to continue slowly but surely to keep going down. Next chart. Live cattle doesn't want to quit. I'm going to have to turn to vegetarian. The overbought condition is very, very high. We might be seeing some divergences start to build here. I don't have a bearish engulfing yet, but if it were to break below yesterday's low today, we would have a bearish engulfing ER sell signal in overbought territory, and I'd scream bloody murder. Tomorrow's recording, of course, that we had a sell signal today. But that's what you need to look for, getting below yesterday's low in order to get one of my signals. Next, live hogs. Again, neutral. We're bouncing back and forth in a trading range zone. I think the red zone just a little bit above current quotes is going to stop the rally, and I would not be surprised to see it come back down to that little blue zone. So we're between a rock and a hard spot. Next chart is OJ, and it's overbought again. I can't believe it. And I'm looking for sell signals. Every time I get them, I get maybe a day or two to the downside. The last one worked for 2 days. That's enough to make some money, but it's not what I want. And the previous one before that really didn't work. The one before that did work for about 3 days, 2 or 3 days. But again, I'm looking for a major, huge, long-term high here. We're at extreme price levels. And the next time I see a bearish engulfing, if I get one on a high day that looks like a big turn, I will start talking about a long-term bear market in orange juice, but I just don't see it yet. Next chart, cocoa. Its big problem was yesterday with a very hard crash. No surprise, overbought conditions. Today we're doji inside trading range, but near the low, around where it opened. So it opened a little higher, popped up, came right back down to where it opened, the low of the day almost, and not doing all that well. I'm still looking for more weakness, maybe down to 3,300. Next chart is coffee. now getting for the second day overbought, but also getting close to the top of this resistance area. So I'm not going to be surprised if it turns back down again at any time. I'm waiting for sell signals. I wouldn't chase this market up. I don't think it's got a lot more upside potential at the moment. Now, if it starts to break and close above 168, that's going to change the story a little bit, because then it might come all the way up to 191-ish. But that hasn't happened. And the last time it was up there, it stopped cold turkey. So why not again? History repeats itself. That's why we look at these formations. They happen again and again and again. Okay, next. Sugar. Overbought again. I think it's going to turn down sharply and quickly very soon, but I'm not ready to go short. I don't have a signal, but I would not go long. I don't chase bull markets up. That's very dangerous. Next. Cotton's more evidence that it's still bumping up against that red resistance zone. Can't seem to get above it on a closing basis, except for that one situation here, which is a false upside breakout, a false bullish breakout, or what's also called a bull trap. And it nosedived right back into the zone and below it the next 2 days, 2 days. So I have to think that the resistance area is going to do it again, and we're likely to see a move down to 85 and lower real soon. That's it, ladies and gentlemen. We're bouncing a little bit, 30, 40 cents on indexes, hardly anything. I'm watching for major bearish breakouts very soon. Have a great day.